Yo, what is going on, everybody? Welcome to day 9 of the Nick Graves Trades Bootcamp. Today, I'm going to be talking about probably the second most important thing that I will talk about in this whole entire bootcamp, and we're going to be talking about the power of three. I'm sure a lot of you have probably heard about the term power of three before, or AMD, something in the realm of that, but power of three or accumulation, manipulation, and distribution is basically what runs the markets. You can go on any single time frame and find accumulation, manipulation, and distribution. But what actually is the power of three? And that's kind of what I'm going to talk about in this video. And I'm going to show you guys actually really how to use the power of three. So to start off, what is our AMD or power of three? Accumulation, manipulation, distribution, right? Something that looks like this, or like open, high, low, and then like close. If you guys have heard of OHLC before. But this is literally what the power of three looks like. I'm going to draw this out to make it make a lot more sense before I actually show you on the graphs. But example, accumulation is basically where price is just making highs, lows, highs, lows, highs, lows, kind of chopping around, probably making relative equal highs, right? So this is like our buy side liquidity right here, right? This is like our buy side liquidity that we're going to be look to get swept out, right? It's liquidity that's resting above. This could be high time frame or low time frame. Manipulation happens. What do? We come up, we sweep those highs, right? This is the manipulation part of it. We're manipulating, we're stopping people out. And then after the manipulation, there is a distribution phase that reverses, right? This is an example of a bearish power of three. A bullish power of three would obviously be the opposite. It would be accumulation, manipulation down. It'd basically just look like this. And distribution up like this without the charts. So it'd be like boom, accumulation, boom, manipulation, and then boom, distribution to the upside, right? See how this happens? Sweeps these lows. So I can take these out now since you guys can understand it. So there's like the chart, right? We're chopping around, sweep these lows, we reverse up, and then we take out like buy side. Like up here, let's say this is like the buy side that we take out, right? And before I even show you on the charts, I want to go over one other thing that kind of goes with like entry models, right? So if this is like our power of three, I'm going to kind of give you guys like the steps to entries, right? So first off is the turtle soup entry, or the way that I trade, just entering off of anticipation of a reversal, right? So the entry for the turtle soup is going to be right here, right at the bottom. That is the turtle soup entry. So right here is entry number 1, or turtle soup, right? And this is where you catch the tops, the bottoms, all the above, right? This is the first entry. What comes next? The next entry is going to be right here. Before I tell you guys, try and use your brain what the second entry is after the liquidity sweep. But I'm going to give you like 5 seconds thinking your brain, thinking your brain, thinking your brain. Boom, it's CSD. CSD is going to be the second entry, okay? Boom, second entry. What's the third entry going to be? Gonna give you guys a second. Think in your brain, thinking your brain, thinking your brain, thinking your brain. Boom. It's a fair value gap entry, right? Or a IFEG, same thing, because technically this is getting inversed. This is the fair value gap entry, right? And then from then on, I would say like the fourth entry is just like order block, reach, tracements / fair value gap entries. Okay, so that is like kind of like the phases of like how the power of three works and how entry models works, right? You have your accumulation. It creates relative equal lows. Say there's like some PD ready to get filled. We sweep it. That's the first entry, just off the sweep, off the rejection. That's your sweep. That's my entry at the bottom. Then the CSD entry comes next. Then the fair value gap entry comes next. And then after that, it's just order block retracements and other fair value gap entries. But you can see how the RR is just completely different, right? And I want to show you guys on this. So starting off right here, in this case, you have a 5-point stop with a, I can't even see how many points that is, 56-point take profit. This is a 10-to-1, right? But let's say we move up. Let's say we go to the CSD entry. Or wait, sorry, the entry would be like, yeah, okay, yeah. So that's a 10-to-1 RR. Now the CSD entry is a 5-to-1 RR. You see how we're risking 11 to make 56? Or wait, sorry, actually less than that. It's a 4 RR. So we go from a 10 RR to a 4 RR. Now, what's the fair value gap entry? It is now a 1.96 RR, right? And then after that, it's really just like not the greatest, but I mean, it's just 1-to-1s, right? So we go up here, say this is like an order block entry. TP is here, stop loss is here. Now we went from a 10-to-1 RR to literally a 1-to-1 RR, right? So this is like a perfect example of how important entries are, right? You saw the differences. This is a 10-to-1. This is a 5-to-1. This is like a 2-to-1, and this is a 1-to-1. There's big differences with entries, right? That's why I love trading, the anticipation, the turtle soup, all the above. But this is just an example of how the power of 3 works. Now, we're going to go to today's price action, and I'm going to show you 2 examples of the power of 3 and how I use the power of 3 to trade today. So, coming into the day, I wanted to see shorts play out. Why? We had buy side resting above. Okay, and also guys, pretend like these aren't here because this is obviously after the market. We had this buy side resting above. Also, if I draw our discounted premium from top to the bottom, oh wait, sorry, that was after market open. There we go. Because this was the low pre-market, right? So if I go to the 15-minute, this high to this low was the range that we were playing in before market opened, right? What do we have here? We have buy side. What do we have here? A 15-minute gap. Guys, I'm going to be putting everything together, okay? Again, back to PD array refinement. So look, what's inside the 15-minute gap? Nothing really on the 5-minute. Now we go to the 1-minute, and look what happens. We have a 1-minute order block right here, and look at the reaction. And for those of you that are students, you guys saw me take this trade, but this was the trade that happened, right? Now, I want to show you guys how the power of 3 is able to be utilized in this. Look what happens. We have buy side above. We're just kind of accumulating in this entire range right here. Nothing really happens. There's no buy side or sell side swept. Look what happens here. Market open, manipulation. And then now what do we get? Now what do we get after this? Distribution. Like, boom. Prime example of the power of 3, right? Look at this. Accumulation. We manipulate into premium, into a 1-minute order block, 15-minute fair value gap, all the above, off a Judas swing. I'm going to be talking about Judas swings next video. And then we get a distribution down to sell side. But there are always 2 sides to the power of 3. So look here. Where did we manipulate to? Oh my goodness. Sell side. Oh my goodness. Sorry. Sell side from, what was it? Yeah. Monday. Sell side Monday Asia low. Huge area of liquidity that I'm looking to be taken out. Because why? It's a 4-hour fair value gap paired with liquidity with resting buy side above. Look what happens. We go to the 4-hour. We draw out our discounted premium. We take it from the high to the low. Boom. It's in discount. It fits for longs. So now what can we do? Again, this is how you catch power of 3. All of this is accumulation. This is our manipulation. We sweep sell side in discount right here, this low. And then we get our distribution up to these highs. Most likely are going to be taken out later. You guys see how I just used the power of 3 in both directions? You're able to, the first power of 3 that I used was this power of 3, this accumulation manipulated into this 15-minute gap right here, distribution down. But in cases, the distribution for the first phase is the manipulation for the second phase. So look, accumulation, manipulation, distribution. This distribution now becomes the manipulation because we sweep sell side in discount, and now we pump up, boom, boom, boom. Now guys, again, look at the entries. What do we have here? This is your turtle soup. If you enter off the rejection, you go in about, oops, sorry, let me get rid of this. If you enter off rejection, you go in about 25 points of drawdown. You enter off the CSD, you have 60 points of a stop loss. So you go from a 25-point stop loss to a 60-point stop loss. And then this fair value gap retracement to like 115 point. Obviously, this is the 15-minute, but like you guys see how the entry levels work. And then boom, look, we come up, and then we get like another retracement on the 5-minute. And yeah, guys, like that is like 10 minutes of just straight sauce for you guys, bro. I'm not gonna lie. I thought the PD array refinement was good. Bro, this video is 10 times better, bro. I just dropped free sauce that people pay thousands and thousands of like $10,000, $20,000 for, guys. Dropped it for free for you guys on YouTube. This is insane. Rewatch this video like 40 times until you really understand this. If you guys have any questions for me, comment on my Discord, comment on the YouTube. Make sure you guys like, subscribe, comment. I love you guys so much. Thank you guys so much for all the support. You guys have been amazing throughout this entire bootcamp. I'm excited to live trade after teaching you guys everything, go through like the market walkthrough and everything. But yeah, this was day 9 of the bootcamp. I will see you guys tomorrow on day 10. Peace.